Hello again, Carmen.
Hi, how you doing, Quentin?
I'm just right, just like I want to be.
Right.
Wrong person. Hard work. Hold on a second. All right, everyone. We're going to be getting started with part three of our how to read the markets. All right. So we'll get started here in just a second. Give me a slight moment to go ahead and get everything loaded up, and I'll be with you in 1 second.
All right.
All right, ladies and gentlemen, part three of this section of how to read the markets is about putting it all together. In the previous sections, previous parts, we've talked about the four things the market can do, the seven things the market can do, which is a higher high, higher low, lower low, lower high, double bottom, double top, and reverse. The four reasons to take a trade, which is a lower high, a higher low, divergent higher high, and divergent lower low. And I apologize, you can't see my face, but now you will. All right, so here we are. So, and we also talked about the market structures, the inside bar market structure, the higher high market structure, the lower low market structure, the higher low market structure, and the lower high market structure. We also talked about the divergent trades and how to see those divergent trades. So today we're going to go over how we put it all together so that we have an identification on how exactly to read the markets. And it literally is like reading a newspaper, like reading books. You just have to read it from left to right. And when everything lines up, then you know you have an opportunity that has a high probability of winning. And in addition, you have an opportunity to win big. So here we go. We're gonna go over everything, and then I'm gonna go over everything as a whole, and then we're gonna segment each chart out so you can see what I'm saying. All right.
All right.
So example one is right here. I'm going to use my pointer most of the time. Okay, example one is right here where you see the market is moving down. Everybody can see the market's moving down and
Mm-hmm.
everything is red and red. So because the market's moving down and everything is red and red, now we know we need to be looking for a short. All right. And everything is now moving down red and red on my chart to the left, to the right of that, which is the 2700. The largest time frame is the 8100. So you have 8100, 2700, 900, and 300. So on the 2700 chart, now that we see everything is going down, red and red on our 8100, now we look into our 2700 for a pause in the market. Where you see that little green bar right there, there's an
Mm-hmm.
identification for a pause, right? That's an identification for a pause. And then if you come over here to then the 900, you can see very clearly why I talked about the market structures. This is a market structure lower high. They made a higher high and a higher low here, and then it broke that high. So this is a market structure here, and it's a lower high. And then the only thing we do then at that point is we look over here and we see where we have the ABC pattern.
Mm-hmm.
And then when price closes below that ABC pattern, we enter into our trade. It's simple as that. That's all we do for all of our trades. Now, let me show you, I'm gonna give you a few examples of this because I think it was 4 of them yesterday. It does this repetitively all the time. And once you understand how to read that, then and only then will you be able to consistently be able to make money in the markets on a consistent basis and not have any worry, because you'll know exactly what you're doing, right? So let's go to the second one, which is the same thing. Market's moving down as we see on the 8100, correct?
Mm-hmm.
You see the pause in the market that happened,
Mm-hmm.
right?
Mm-hmm.
And then you see where the market gave you the market structure, gave you a high, higher low. It broke the high of that bar, right?
Mm-hmm.
On the 900. And then on the 300, where you see that green box, price
Mm-hmm.
closes below the ABC pattern, and then she goes down. So
Mm-hmm.
that's trade 2. There were 4 trades yesterday, all of them won, and I'll show them to you. So let's keep
And
going.
that one, we entering that on the 300, right?
Yes.
Yeah, okay.
Yes. So same thing here. We have another lower high. Market's going down. Then once the market starts going down, let me make sure I got I'm sorry. And then you see here where it gives you the pause in the market. You see that green bar is the pause, right?
Mm-hmm.
Right there. And then you see the market structure here, the lower high.
Mm-hmm.
I'll scroll it over a little bit so you can see that it's a lower high than all the previous bars. And then here you see where you have the ABC pattern. It's slight, but it's an ABC pattern here. And that's that 4 reversals. And I apologize because I didn't mention that before. The 4 kinds of reversals. You got the 2B, the 3B, the 1, 2, 3, and the ABC.
How many bars form a market structure?
We'd have to go back to the second part of the class, but you can have many kinds of market structures. You have 3 bars, you can have 4 bars, but you have to have at least 3 bars to form a market structure.
Thank you.
All right, all right. And here you see the ABC pattern,
Mm-hmm.
and you see it close below. You enter the trade, and as you can see, it just cascaded down
Mm.
to the downside. So you know that you were right on taking the short. And here's the last trade of the day. Same thing. You see price making a lower high. It's cascading down.
Mm-hmm.
It gives you that pause bar right there. You end up getting a very slight market structure, even though it's slight, it's still a market structure nonetheless. And then you end up getting that trade here on this ABC, double bottom ABC pattern. And then when price closes below, you enter the trade. And as you can see, that trade went literally.
Do you can you
Anybody
point
see
out the ABC pattern again for me? You know how you
Yes.
label it?
So here's your ABC pattern. Let me look here. And that's not what I meant to do. Hold on. Let me go to tools, type text, type text. You got A. You have B. And you have C. So that's your ABC pattern.
Okay.
And then it completely, once you get into the trade, it goes in your favor a little bit, then it meanders, and then it just falls apart. And then now what we're going to do is we're going to segment each chart so you can see exactly how this goes. The reason to take a trade is always on what I call that fourth or granddaddy of them all charts, right? You want to take a trade based on either it's a lower high, higher low, divergent higher high, or divergent lower low. I haven't put divergences up here for the simple reason we don't trade divergences in our actual room for the most part. We don't trade divergences for the most part. But if you can look at here, you have a lower high. This is an overall swing, lower high. Remember when I talk about swing lows and swing highs? And when you talk about swing lows or swing highs, this is a swing high right here, but it's a lower swing high. So you have a lower high right here. And that way you can take the trade. You have another lower high right here. And then when she gets going, you can take the trade. Then you have another lower high right here. When she gets going, you can take the trade. And then you have another lower high right here. When she gets going, you can take the trade. It is really that simple. But the hard thing about it for a lot of people is being able to wait on the exact setup. So now that you have that in place, now let's look at the momentum piece, because now we're going to get into the momentum, trend, and timing piece of why you do what you do. Okay. Let's go again here. Momentum is down. You can see that because we have a market structure down and it's not going up. It's actually going down, and it gives you a little pause bar right there. So momentum is definitely down right here.
Mm-hmm.
So that's momentum on that chart. Then you have momentum down here with another little pause bar. So you have momentum here. And then same thing here. You have momentum going down, not trying to push up. Momentum is pushing down. So now your trend and your momentum is both down on your larger time frames. And then guess what? We're going to have a situation where on your trend chart, guess what? Now that trend is down. You see that trend is down here?
Mm-hmm.
That trend is down right here. And earlier in the day, when we had those other two trades, you'll see too that I'm trying to get there. Give me a minute. Let me pull it down. So this is the second trade of the day. You can see the trend is definitely down here, right?
Mm-hmm.
You got a lower low, lower high, another lower low, another lower high. So now your trend is definitely down there. And in addition to such, you have, I thought it was one more. Could be wrong. Maybe that was the first one. Oh, I didn't have it highlighted. It was here. It was right here. That's not what I meant to do. All right, the trend went down, right? Let me pull my tools up and pull that right there. The trend went down right here because I remember the trade being at 939. So now your trend is down. So now we've talked about it, right? The reason to take a trade on the 8100, lower high, higher low. Is it a divergent higher high, divergent lower low, right?
Mm-hmm.
Then you start to go here and you start to go to your next time frame and you say, okay, cool. Is my momentum now in the favor of the direction I'm trying to take the trade? Answer to that question is yes. Then now we go to the next. If the reason to take a trade is there, yes. And then if momentum is down, answer is yes. Then the next thing we do is go to the trend chart and say, hey, is the trend down? Yes. If you answer yes to all those questions, the last thing to do is to then answer your timing piece. You're going to get in on one of the four reversals. My favorite reversal to get in on is the ABC reversal. So we're going to scan these charts, these charts here, and I'm going to show you. I'm trying to get to that time frame, ladies and gentlemen. Give me 1 second. That's going to take a while. So let's do it this way. And then do it this way. We're going to start at the beginning and then we'll take it to the end. This session will end at about 30 minutes. So we have about 12 minutes left. About 12 minutes left. So just give me a second as I take the charts where they need to be so that you can see the timing mechanism. That's the second trade of the day. Let's get to the first trade of the day, to the 940, 939 area. Should be coming up very soon. There it is. Okay. So now I'm going to zoom in and show you the ABC pattern here. And as you can see here, I'll draw it so you can see it. You can see the ABC pattern in each of these trades. Now, that's my favorite one to enter on. There are three other reasons you can take the trade. You can take the trade off of 3B, 3-bar reversal. You can take the trade off of 2B reversal, which we use the 2B to confirm the ABC pattern. And there's also the 1, 2, 3, which is my least favorite to enter on. But these kinds of trades, if you take them off the ABC pattern, they just work well, right? They work well, they work well, they work well, they work well. So that's trade one, right?
Mhm.
Trade two, same thing. And that's your timing piece. Trade two is going to be essentially the same thing. We'll be able to get to it here. That's it there. Same thing. You got the A, inside bar there, B, C. That happened there. Trade then closed below. Guess what? Trade works. All right. And then it gave you another ABC pattern there. So that's that. And then you had the other two trades. Let's get to them. And that's taking a while, huh? So as I'm scrolling through here, did I pass it? I don't think I passed it. Nope. There it is. There's the third one. ABC pattern. A, B, C. Same thing. You enter, this is your timing mechanism, and that's how you enter the trade to the downside. So that's the third trade of the day. And the last trade of the day happened right around here. This was the A, B, C pattern. So now, when you're trading, the most important thing that you want to know, the most important thing that you want to be able to see is you want to have your reason to take a trade. You want to see momentum, trend, and then time. That's it. That's putting it all together for you, ladies and gentlemen. Now I'm going to open it up for questions to see if there are any questions for me that other people may have questions about that are not actually on the call. As one of my good friends say, don't everybody speak at once.
Okay, I do have a question.
Okay.
So what I'm looking at here, is it essentially the same line of candlesticks divided up into time frames based on the numbering of these charts?
That's correct. So I'll give you this. This is a bonus because you asked me a bonus question, so I'm gonna give you a bonus answer, right? So we derive all of the charts that we use are volume charts. Everybody in the world uses time charts, right? As a former professional trader, I know for a fact that price and volume rules in the market. The only thing I really want to see is price and volume. Price does not trade in time, it trades in volume. Price, again, I'll say this again, price does not trade in time, it trades in volume. So price and volume are the two most important things that you can look at on any trading chart, because it'll tell you everything you want to know. All right. So the way I derive my time and my volume charts, or the way I derive my volume charts, is I take the average volume over a 30-day period of time, and I divide that volume by the number of days in that trading month. And then I take that by my time frame differential that I'm using, which in this case is 3. And I divide it by 3 until I get to a sequential amount that is equivalent to the average volume for the previous month. I'll say that again. What I do is I take the volume over the last month, however many trading days it was for that month, and then I divide that volume by whatever my time frame differential I want to use, which in this case is 3, until I get down to a tradable amount of volume that allows me to be sequential with that volume based on the previous month. That's all I'm doing. So that's how I came to a 300, 900, and 2700 and 8100 volume chart.
Okay.
Did that answer your question?
Yeah,
Cool.
thank you.
Are there any other questions for me? No more questions?
Can you oh, I kind of came in on a little bit after so I was listening to you kind of go from the the 8100 to the 2700 on down.
Okay.
So you were looking at, I guess the first thing you were looking at on the 8100 was what I guess just the fact that it was going down, because I know you said when you got to the 2700 you were looking for the pause in the market.
Okay, so I'll give it to you so you know. The 4 reasons to take a trade, which are lower high, higher low, divergent higher high, divergent lower low. That's the only thing I'm looking for on the 8100. Right?
Okay.
Then I move over to my 2700 to ensure that my momentum is then going to the downside.
Yeah.
Okay. And then also what I do is I wait for an opportunity. Hold on for me 1 second, ladies and gentlemen, please. Give me 1 second. So what I do is I then go to my 2700 to see where my momentum is. Okay. And then I line that up with my 900, which tells me where my trend is.
Yeah.
All right. And then I go to my 300, which is my timing mechanism. Okay.
Okay.
I do that, and I do that in sequential order so that I can ensure that I'm trading with the trend and momentum of my largest time frame. Because if you notice, I really want my trend to my 900 and my 8100 to be doing the exact same thing. That's why we call it a trend within a trend.
Okay.
And that's what we're
And you was
looking.
only okay. And you said you're on your larger chart. You only looking for one of the 4 reasons to take a trade.
Right. I'm looking for only 4 reasons to take a trade. But I'm also looking to see that is in trend as well. Right. Because you can take a trend within a counter trend trade. We just don't want people in the beginning taking trend within counter trend trades until they get familiar and proficient at taking the trend within the trend trades first. Does that make sense?
Yes.
Because the trend within the trend trade is the safest trade you can take.
Mm.
And it also is the most profitable trade you can take. But here's the caveat. It is also the trade that you have to wait for the longest to get a trade.
Yeah.
Simple as that. Did that answer your question?
Yeah.
All right, cool. I just want to make sure. Any other questions we got?
And then at the end of that, we are looking for one of the reversals on the 300 chart or the lowest time frame chart in order which to get our entry point.
That is correct. That is
Look, one of
absolutely.
the
Say it again, Quentin.
I said, based on what I've learned, we are looking on the 300 chart after we've done our looking for the reason to take a trade on the 8100, making sure the momentum match on the 2700, make sure the trend follows the 2700, and now we're on our timing. So we're looking for one of the reversals to happen on the 300 chart, for example, like he's shown on the ABC pattern.
Correct. Correct. That is correct. Ronald, did you have something?
Yeah, no. I'm listening to Quentin. That was perfect.
All right, cool. Well, I'm gonna ask again. Are there any other questions?
Just to be clear, you take the trade at the 300 chart, you said, correct?
That is correct. That is correct. All right. Any more questions? Going once. Going twice. Going 3 times. So
I think for doing this and putting this together like this training class, I think this is going to help us continue to be even more profitable. Going back looking at parts 1 and 2, and then summing everything up with part 3. So thank you very much.
Oh, absolutely. And ladies and gentlemen, I didn't tell you this, but we're going to be training. There are 52 weeks. I got 52 trainings set up for you. We got another training that talked about scaling on next week. So we're going to get into, well, now we've learned how to read the markets. Now I'm going to teach you how to capitalize on the markets. And to capitalize big, like a professional trader. So that's the next step in the process. We have 52 weeks of training set up. So please join, subscribe, like, share if this is an interest to you. So if we don't have any more questions, ladies and gentlemen, I'll go ahead and end this session. This is part 3, the last part of the first part of the series called How to Read the Markets.